Let's welcome in our first guest. We got Rohit Srivastava, fund manager at Sharekhan, joining us from Mumbai. Rohit, thanks so much for being with us. Today we're seeing perhaps some short covering rally which is underway. Do you think some stocks have found good bottoms? What would be your top picks?
No, I think we haven't bottomed as far as the market as a whole is concerned. If you're seeing any bounce back, it is likely to be very, very short term, maybe for a day or two at the most. Some of the covering may be related to expiration, because the markets have been down for most of the month, or rather I should say for the most of the last 3 months, because we topped actually in early September. But a large part of this sell-off essentially started in November, and I think apart from getting a small bounce, we shouldn't be looking for more. And if there is any area to pick, it would only be in the metals and commodity space, simply because that's the one area that has continued to outperform the market as a whole, essentially on the back of rising commodity prices around the world. So that's the only one spot, I think. But then if the market does see sharp sell-offs, you will see corrections in that space as well. But like I said, they've managed to hold their supports, and that's the only segment that we would look at on the positive side.
All right. You said that any rally from here on is likely to be short-lived. What levels are you looking at for the Nifty where you think additional selling pressure will come?
Well, I think not more than 8080 is my current thought. If we do overshoot, maybe 8200. So 100, 200 points on the upside are not much. After all, you've lost almost 600 points from the highs this month. But having said that, I think once we are done with this, maybe 50, 60 points more, maybe if we don't cross 8100, then we would start looking at the 7700, 7600 levels on the way down.
All right, 7700 levels could be possible if the Nifty doesn't cross 8100 convincingly. What happens to the trend then, Rohit? Post the 8900 level, we were seeing the markets correct in a steady fashion, and once the demonetization announcement and the US election results came in, it became a precipitous fall. Do you think this down move is anyway close to getting over? What are the crucial retracement levels you're watching out for?
Well, I've already given you the key levels that we would watch out for on the upside. On the downside, one should probably look at today's low, or even the low that we made 2 days ago, closer to around 7900. So I think once that breaks, if you're still looking for more confirmation, then a break of 7900 would be a sign that this sell-off is extending on the way down for several more 100 points. Now, my one point I'd want to make is that we peaked in September. So understand this sell-off is 3 months old, but a large part of it came, like you said, right after a lot of these events. And these events have only gone on to exaggerate the trend that was already in development. So we are in a downtrend, and we shouldn't be looking at, looking that, these events are really led to a fall and it's overdone. Because these have led to some serious implications for the near term, and that means that for maybe for 6 months, maybe for 12 months, we could remain in what would be a generally downward market. So you might get counter trend moves which you could trade into, and that would happen once we get an extreme oversold condition. At that point of time, you'd probably look for trades that can last for a couple of weeks. But this is definitely not a time to be investing or be an investor. And what I mean by investor is you need to have a perspective which is more than a year, maybe up to 3 years to 5 years. That's what investing is. It's not about 1 month and 2 months or 1 week and 2 weeks. So if you're not in the trading category, then I think we are in a bear market that's likely to last for many, many more months. But you will get counter trend moves, and I think it's a bit early right now to look for a counter trend move that can last for a couple of weeks and that you can trade into. So right now our approach remains to be looking at bounce backs to sell into rather than bottoms to buy into. So the approach is really a sell on rises approach, not a buy the dip approach, and I think that's likely to continue at least for a couple of more weeks, because we are not done with all the events. There are a lot of more events coming up in the next couple of weeks, from our own rate policy, the US rate policy, and the elections and voting that's going to take place in the Eurozone.
All right, so you don't see the trend of the market to be higher over the medium to the longer term, say till up to 12 months. So then if your strategy is sell on rise, what are your top picks?
For a long time we had this outperformance between in the mid and small cap segment, or between the banks, which were essentially the private banks that were doing better than the public sector banks. Now we have seen a significant reversal in that trend, because what I believe is in a broad-based bear market, which means almost everything is unlikely to go up. But what would be your top picks? They would actually be the strongest segments, because those are the ones that are unwinding. And which is what you're seeing. You're actually not seeing so much of selling right now in the PSU banks, though I do think they should catch up with the banking sector on the way down. But most of the selling is coming in the private sector banks. So that's one segment that we would continue to focus on. We'd also want to look at NBFC stocks. Some of them have bounced back in the last couple of days. The next two segments would be the auto stocks, and lastly, I think it would be realty. So I think these are the weakest. Most of them being financial related or interest rate sensitive related.
All right, so you're looking at these ideas and looking at rallies here to look to short them. Amongst, say, the PSU banks, which ones do you think look weak, and which ones on the charts look strong?
Well, the strength is only one of, that they would have fallen less. So, for example, today you see Bank of Baroda that is up 3%, so that might appear a little stronger. I do think in general the entire public sector banking space has actually rolled over in the last week, because on Monday when you saw that selling, a lot of the momentum indicators for most of the banks went into sell. So it's only a perspective of which ones you'd like more. The weakest ones have been, for example, PNB, which is not bounced back much today as well, and saw significant losses a couple of days back. There's also another weak one would be Syndicate Bank or Oriental Bank. So these have been the larger underperformers. The strength has essentially been in SBI and BOB and Canara. So I think that differentiator remains, but eventually my sense is all of them are going to be heading lower. So it's not like one is stronger than the other. They are generally on the way down, but yes, you're seeing greater momentum on the downside in some stocks versus the others.
Right, Rohit, you said you don't expect the markets to have a big rally over the next few months, and you expect them to be largely trending slightly lower. Are there any stocks or sectors which could buck this trend, which could show some outperformance and reward investors should they stay invested for, say, more than 12 months?
For more than 12 months, I think it's likely to be a little difficult, because at some point of time, like I said earlier, the only segment that I would like to be positive is on the commodity space, because I expect that commodity prices in general, not just metals and agro commodities, but at some point of time even precious metals, which means the entire commodities basket is likely to move up. We saw one move of that in the first half of last year. And after that they were consolidating for a while, and the second move has actually started with the move up in copper prices, and more recently in crude. So I think that move is going to continue for several more months. So if you do have a couple of months time horizon, then definitely the metal space remains one of the areas that I would be positive on. Will it spread into 12 months out? It's a little hard to say. It can. So you would have to keep tracking it, because these segments are driven a lot by flows. And you have to see how different asset markets actually react from time to time to take that call. But definitely, that's the only sector, at least for the next couple of months, that I could still be positive on. So we'd look for, and we are looking at, the metal stocks. It's a pretty wide list, and most of them are actually holding ground. Of course, you're seeing the best performance in those exposed to aluminium and copper. You're still not seeing the steel stocks pick up so much, but I think if the commodity rally picks up pace in the coming weeks, then you'll probably see it spread to other metals as well.
In association with NSC.
Welcome back. You're watching NDTV Profit. The markets still have a cut of a third of a percent. So the Nifty is still above 8,000, and that's a relief because the majority of the day we have spent below that level. We have Rohit Srivastava still with us. Rohit, you mentioned that metals as a space is one where you think you will see strong gains. Now, does the view extend to other resource stocks, notably those tied to crude oil?
Well, the impact prices can be very, very different. For example, a large part of what we saw in oil and marketing companies were gains coming because of falling crude oil prices. So, and also that the government was passing on some of the gains by, cutting back on subsidies, raising the retailing prices. Now, the question is, will that trend continue? If it does, then it would be positive for that segment. But I think that segment has had a pretty good run. And beyond a point, if oil prices do go up, then probably we would see, some kind of a correction in that section for the time being. So, rising crude oil prices would actually hurt some sectors. For example, you've seen recently a sell-off coming in on the airline stocks. A while back, while the view was still that we were expecting oil prices to fall, we thought that, the airline stocks would actually do well. But subsequent to that, once oil dropped to around $44, it has started to turn up again. So we are finding that it's not able to really breach the 44, 42 support zone, and possibly it will get past the $50 mark at some point of time, and that would actually be then again negative even for that segment. So rising oil prices likely to see some negative action in some of the sectors that have done well on the back of the big oil sell-off that we saw more than a year back. I don't think we'll see another big sell-off in oil very soon. We'll consider that at a later point of time. But right now, the trend for oil prices with the rest of the commodity pack continues to be for higher levels. And that could have a negative impact on some of these segments.
Right. Previously, when we spoke, Rohit, you remain quite cautious on the IT space. Would you remain cautious, or have you seen any signs of bottom formation? Could one pick any IT stocks that could, if not do very well, at least outperform the markets?
No, that was a very, very long-term call, and it remains. If you've seen, the IT stocks did give a very, very minor bounce back in the second half of October. But once that happened, we saw the selling really resume. So the lows that were made in October have actually been broken, which means the next leg down has already started. And so we would not see a bottom yet. I think it would probably continue into the year end, and you would also want to actually now discount what kind of measures are going to come out from the US itself on immigration and so on, and what kind of effect that would have. So in general, the trend, when we just look at IT stocks, they don't look like they've completed their moves down. They're not very oversold, they're just languishing. And every time after they consolidate a bit, they start falling again. So there's really no sign of reversal there as yet.
All right, no sign of reversals for most of the IT stocks. What about some of the bank names? You said metals is one clear-cut space that you like, and the PSU banks are looking optically better than the private sector banks. What does one do if one has invested in, say, the private sector banks? Because these were being touted as, the one to be able to capitalize on the growth in the economy. And despite high valuations, many investors put in money here. What do they do now?
Well, it was a trend that was in force, and it's been forced for several years, and so you would tend to become very, very comfortable with that position. But at the same time, you said it yourself, valuations were high, and when stocks keep going up on high valuations, often we simply disregard it because the underlying growth continues to push prices higher. But when that stops happening, then it's historically been learned, that buying stocks on high valuations never pays off. So you should ideally wait for better valuations to show up. So if you ask me what would I do, I think my signs are clear that one has to take exits from many of these stocks and wait for better prices. What is not clear is what would be the depth of the correction that we would really see in that segment. Because like I said, if we are in a larger bearish trend, then some of these stocks could see a deeper correction. But then if I go back, there are some stocks like, say, for example, HDFC Bank has a history really of not correcting too much. I remember way back when we had the Y2K bug and then the big sell-off that followed after the year 2000. HDFC Bank was one stock that just would not decline no matter what happened in the rest of the market. So sometimes certain stocks may show unusual strength. But while the fall is going on, it's likely to affect each and every one of them, and that is why, apart from that one odd counter, in most of the others, you would see some kind of a decline.
All right, let's just pull out the Nifty for you. We've seen a sudden sell-off from the levels of 8,020 or thereabouts. The Nifty has suddenly come down to 7971. We're really seeing those expiry moves coming through, and the volatility that we see on expiry day is clearly playing out. Rohit, if you believe that the markets are not going to be much higher, say 12 months from now, where can one find refuge other than the metal stocks? Do you think there are some defensive bets from FMCG or even pharma that look good?
I would only repeat that when you have a broad-based sell-off, it's likely to affect each and every sector. The pharma sector has actually been one of the underperforming sectors of the last year. Now, because the pharma sector actually topped early, you would probably look for it to, also find a bottom early. But I don't think we are there yet. So we would really not want to participate in the defensive space as yet. You really want to wait back and let the decline actually continue for a while, maybe for a couple of months, a quarter, before you actually start looking for those kind of turnarounds. So according to me, I really can't see any other segment right now which I should try and attempt to pick into.
All right. Thanks so much for speaking with us, Rohit. So Rohit believes that the markets will be trending lower over the next few months, and the only space that will manage to buck the trend is the metal space.